Hi, Brett Warren here, your trusted resource for the Brisbane property market. Today I'm joined by Shannon Davis. Hey Shannon, how you going?
G'day Brett, thanks for having me.
Shannon's our director here at Metropole and as an investor himself and specialises in building property management as well. Has had great success with that with his own companies on a number of occasions. So I thought I'd take this opportunity to have a chat with Shannon about the current rental market and state of play. It's a bit of a thorn of the investor's side in some areas at the moment. What are your thoughts with what's happening, Shannon?
Yeah, I think it's probably been a bit disappointing. The Brisbane market and Southeast Queensland market hasn't had as much mining exposure as say Darwin or Perth, but it hasn't had the same growth as Sydney or Melbourne as well. So it's the one that's sort of got pundits a little bit confused and wrong.
Yeah, absolutely. And I think it's a bit too speed, isn't it? You know, there's certain, like everything, there's areas that are performing very well, but there's certain pockets that aren't performing too well from a rental perspective. You know, a lot of oversupply in apartments and things like that. Is that what you're finding as well?
Yeah, I think if you're a headline reader, you're probably just going to think Brisbane's just a total basket case and no areas of growth, which it couldn't be more untrue, I don't think. My own suburb did 17% last year for houses, and there is a little bit of a divergence between houses and apartments.
Sure.
But in saying that again, if you're a headline reader, you're going to say all apartments are bad. But we can still show you some areas that have got good boutique apartments, walkability, and are still growing.
Sure. And as rents are softened in that kind of market, that apartment market, what are your tips for investors that are struggling with that a little bit and ways around that type of thing?
Yeah, sure. It's a tenants market, probably the worst I've seen since about 2009. We've lost a lot of tenants to buying. In many cases, they can see new stock in oversupplied area cheaper. There's incentives such as a week or 2 weeks free rent, iPads, all sorts of things, TVs. Yeah. So it's as bad as I remember it. So first and foremost would be keep your tenant. Listen, it's a tenant's market. Maybe don't be too bullish on rent rises because you'd be surprised if it got relet for today's money.
Yeah.
Secondly would be if you can't avoid losing your tenant, would be to listen to the market's feedback, and in some cases you might have to chase the market down.
Yeah.
We're coming off a strong position at say 4.5% yields. Even though it might be a bit of a price drop, it's going to fall into line and do what most capital cities are doing with falling rents percentage wise anyway.
Yeah.
So listen to that market and not accept $0 per week rent.
I think one of my favourite sayings of yours is, a vacancy is the enemy of the investor, and it's probably very, very true in this situation, isn't it?
Yeah, you're losing 2% every week you're vacant. So if we've got 5 weeks of vacancy, we've lost 10% of our annual returns. And I think a lot of business people, remember you're in business. If you're an investor, you're in business. And I think they're good at gains, but they're not as good as protecting losses. So someone like Coles is going to discount their stock before they throw it in the bin, and there's worth nothing. And as investors, we're selling shelter to customers, and we need that tenant in. And so we might need to take a discount in order to get someone in, rather than have it lie empty.
Yeah, absolutely. I think that's a really good point. And also, we're looking at yields. We're talking 4.5%, 4% yields. I mean, that's still well above some of our southern states, and there's still good opportunities for investors out there. It's just knowing where to look, isn't it?
Yeah, definitely. And we can help with that as to what areas are looking oversupplied. Maybe you're in an area where furnished apartments might be, an area where you can get yields. And there's also things such as granny flats and stuff as well for the yield-focused investors. So we can, help and give some advice in those areas. But for the investor looking for a Brisbane purchase right now, it's not overcooked. It hasn't been overbought. It's got sustainable yields. And I think there's a lot more upside to Brisbane than there is to many other capital cities. Yeah,
absolutely. I think a lot of the data are showing that from terms of capital growth and also a rental perspective that, hopefully the worst is behind us. The mining downturn's gone and, the only way's up.
Yeah, definitely. And it's just starting to lead with some of the interstate migration as well.
Yeah. No worries, Shannon. Well, thanks for sharing that with us. It's good to pick your brain out again, so I appreciate your time.
No worries. Thanks, Brett. Anytime.